Most of us were handed a financial education by people who were never taught one themselves. We were told to study hard, get a good job, work for a steady paycheck, and save whatever is left. And most of us followed that advice exactly, and arrived somewhere between comfortable and quietly stuck, wondering why the numbers never seemed to move the way we hoped they would. Robert Kiyosaki grew up with two fathers. One was his biological father, educated, brilliant, hardworking, and perpetually broke. The other was his best friend's dad, a man who never finished 8th grade and became one of the wealthiest people in Hawaii. Same economy, same era, same opportunities, completely different results. The difference was not intelligence, effort, or luck. It was what each man believed about money, how each man thought about money, and what each man taught the next generation about money. That book is Rich Dad, Poor Dad, and today we are breaking it all the way down through the CosmiReads manifestation lens, because what Kiyosaki discovered between those two fathers is not just a financial lesson. It is a complete rewiring of the identity you bring to every financial decision you will ever make. Welcome to the Wealth Edit by CosmiReads, Video 3. If you have been with us since Video 1, you already know that your money story is your manifestation story, and that your financial identity runs deeper than any strategy, tactic, or budget could ever reach. Housel showed us the psychology. Sincero showed us the energy. Kiyosaki shows us the architecture, the specific invisible structures, the beliefs, the language, the habits of thought that separate people who build wealth from people who earn money and wonder where it went. Where Sincero grabbed you by the shoulders, Kiyosaki hands you a blueprint. And like Murphy taught us, the subconscious does not respond to good intentions. It responds to the programs running beneath them. Today, we are replacing some of the most expensive programs you were ever given for free.
Before we get into the chapters, a moment with Kiyosaki himself, because his story is the most important context for everything that follows. He was 9 years old when he asked his rich dad how to get rich. Rich Dad did not hand him a textbook. He put him to work for almost no money in one of his stores. For weeks, Kiyosaki swept floors, stocked shelves, and watched. And then the lesson arrived, not in a lecture, but in a realization. He had been waiting to be paid. Rich Dad had been teaching him to think. The entire Rich Dad, Poor Dad framework is built on that single distinction. Most people wait to be paid. Wealthy people learn to think differently about what money is, where it comes from, and what it is actually for. The first key insight is the one that reframes everything that follows, and Kiyosaki states it without apology. The rich do not work for money. They make money work for them. Poor Dad's program said, find a safe, secure job. Rich Dad's program said, build or buy assets that generate income while you sleep. Poor Dad saw a paycheck as the goal. Rich Dad saw a paycheck as a resource to be deployed. The manifestation implication here is direct. Dispenza taught us that your outer world is a printout of your inner world. If your deepest program says security comes from employment, from trading time for money, then every financial decision you make will be filtered through that lens. You will optimize for safety rather than growth. You will choose the familiar over the aligned. And the universe, which responds to the identity you inhabit rather than the income you wish for, will keep delivering circumstances that match that program. The work is not to find a better job. The work is to install a richer operating system. Marcus had been a project manager for 11 years, solid salary, good benefits, quietly miserable at the idea that this was the ceiling. He read Rich Dad, Poor Dad on a flight and landed with one question circling in his head. Am I building assets or am I building someone else's assets? He went home and made a list of everything he owned. Column 1, things that put money in his pocket each month. Column 2, things that took money out. His column 1 was empty. His entire financial life was column 2. That realization did not defeat him. It focused him. Within 18 months, he had his first small rental property generating passive income. He did not quit his job. He changed his identity first, from employee to asset builder. The circumstances followed the identity, exactly as Clear would predict.
The second key insight is what Kiyosaki calls financial literacy, and his definition is more specific and more useful than anything you were taught in school. Financial literacy is the ability to read a financial statement, to understand the difference between an asset and a liability, not in the dictionary sense, but in the cash flow sense. Kiyosaki's definition is simple and radical. An asset puts money in your pocket. A liability takes money out. Full stop. By that definition, and this is where it gets uncomfortable, your house is not an asset. Your car is not an asset. Your mortgage, your car payment, your subscription stack, your lifestyle inflation, these are all liabilities. They take money out every month without putting money back in. The rich buy assets first. The middle class buy liabilities and call them assets. And the poor spend before they think about either. The manifestation connection here is the thermostat Housel described in video 1. Your financial thermostat is not just set by your beliefs about money, it is enforced by your automatic spending behavior. Every month, without thinking, most people route their income straight into liabilities. The thermostat stays exactly where it was set. To raise it, you have to interrupt the automatic and install the intentional. James came back for this video. You may remember James, the man who hit his upper limit the moment he landed his biggest client ever. He had done the thermostat work, he had raised his identity, and now he was ready for the asset question. He sat down with his accountant and built his first actual financial statement: income, expenses, assets, liabilities, in Kiyosaki's exact definitions. What he found stopped him cold. He had a strong income. He had almost no assets. Everything he earned was flowing straight out through a lifestyle that had expanded perfectly in step with every pay rise he had ever received. He wasn't broke. He was financially illiterate in the specific way Kiyosaki describes: earning well, spending automatically, building nothing. He restructured, not dramatically, methodically. He redirected 15% of income to asset acquisition before any other spending decision. He calls it paying himself into the future rather than paying himself into the present.
The third key insight is what Kiyosaki identifies as the primary reason intelligent, hardworking people stay financially stuck, and he names it directly: mind your own business. Most people spend their entire careers building someone else's business, minding someone else's financial statement, growing someone else's column 1. Kiyosaki's instruction is not to quit your job tomorrow. It is to start building your own asset column in parallel, today, with whatever resources you currently have. Your real business is your asset column, not your job title, not your employer, not your LinkedIn profile. The assets you own, the income streams you build, the financial independence you inch toward with every intentional decision, that is your actual business. And most people never start it, because they are too busy excelling at someone else's. The Series 1 connection here is Elrod's Miracle Morning. Elrod taught us that the first hour of the day belongs to you, not to your employer, not to your inbox, not to your obligations. Kiyosaki is saying the same thing about your financial life. Before you give your money to your landlord, your lender, and your lifestyle, give some of it to your own asset column, every single month, without exception. Sophia returned for this video too. You may remember Sophia, the interior designer who wrote her universe co-creation letter and received an aligned client 3 days later. She had been building her practice beautifully, but she had been treating her business income as personal income, spending it as it arrived, with no separation between what she earned and what she owned. Kiyosaki's chapter hit her like a recalibration. She incorporated her business formally. She opened a separate account labeled Assets. She began routing a fixed percentage of every invoice into that account before paying herself. Within a year, she had enough to make her first small investment in an index fund portfolio. It was not a dramatic sum. It was the beginning of a column 1. She said the shift was not financial, it was psychological. For the first time, she felt like someone who was building something permanent, not just someone who was earning something temporary.
The fourth key insight is Kiyosaki's analysis of taxes and corporations. And while this sounds like dry financial planning, the manifestation dimension is profound. Kiyosaki makes a simple observation. The rich understand how money is taxed and structure their affairs accordingly. Employees are taxed before they spend. Business owners and investors spend first through their entities and are taxed on what remains. This is not a loophole. It is a structural advantage that has always been available, but only to people who understand it and build toward it. The deeper teaching is not about tax strategy. It is about the identity of someone who thinks in systems rather than transactions. Murphy taught us that the subconscious runs in patterns, not in individual decisions. Kiyosaki is showing us the financial equivalent of that principle. Wealthy people do not make better individual money decisions. They build better systems, structures, entities, habits that make the right decision the automatic one. And the universe, which Sinclair taught us responds to frequency and identity, responds differently to someone who has decided to think in systems than to someone still making one transaction at a time. Claire came back for this video. You may remember Claire, the woman who almost let her big snooze talk her out of a life-changing investment. She had done that work. She had quieted the voice. And now she was ready for the systems question. She had been running her consulting practice as a sole proprietor for 6 years, invoicing as herself, paying taxes as an individual, spending what remains. She met with a financial advisor and for the first time understood the structural difference between how she was operating and how she could operate. She incorporated. She began running legitimate business expenses through her entity. She began understanding the language of her own financial statement. She told me afterwards, I did not get smarter about money. I got more honest about what I did not know, and then I got curious instead of ashamed. That shift from shame to curiosity is where Kiyosaki's entire book lives.
The fifth key insight is the one Kiyosaki returns to throughout the entire book: the importance of working to learn rather than working to earn. Most people choose jobs based on salary. Kiyosaki argues that in your early financial life especially, the most valuable currency a job can pay you is not money, but knowledge, specific skills that compound over a lifetime. Sales skills, communication skills, leadership skills, financial literacy, people management. These are the assets that no market crash can take from you, and they are the foundation on which every other asset you build will rest. The manifestation lens here is Clear's identity-based habits from video 2. Clear showed us that every action is a vote for the person you are becoming. Kiyosaki is showing us that every job, every role, every skill you choose to develop is a vote for the financial identity you are building. When you choose experience over salary, when you take the role that terrifies you because of what it will teach you, you are voting for a version of yourself that earns in ways your current self cannot yet imagine. Layla came back for this final chapter. You may remember Layla, the holistic health coach who did the worth audit and raised her rate by nearly double. She had changed her pricing, she had changed her energy, and now she was asking a bigger question. What do I need to learn next that I have been avoiding because it feels outside my lane? She enrolled in a basic financial literacy course. She learned to read a profit and loss statement. She started understanding the difference between revenue and income. She hired a bookkeeper and finally knew what her numbers actually said, rather than guessing from her bank balance. She told me the most surprising thing was how empowered she felt, not from the knowledge itself, but from no longer being afraid of it. The fear of financial complexity had been costing her more than any expense on her statement. 5 ways to apply Rich Dad, Poor Dad to your manifestation and wealth practice right now. 1. Build your own financial statement today. 2 columns: assets, things that put money in your pocket each month; liabilities, things that take money out. Do not flinch at what you find. Clarity is not defeat. It is the beginning of the work. 2. Identify one asset you can begin building this month. It does not have to be a property or a business. It can be an index fund contribution, a digital product, a skill that generates income. The size does not matter. The identity does. You are now someone who is building a column 1. 3. Find one area where you have been minding someone else's business at the expense of your own. One place where your time, energy, or money has been serving someone else's asset column more than your own. Redirect something, even something small, back to yourself. 4. Choose one financial skill to learn in the next 30 days. Not to execute immediately, just to understand. Read one book, watch one course, ask one question of someone who already knows. Ignorance is expensive. Curiosity is free. 5. Run your miracle morning this week with this question as your visualization anchor. Who is the version of me who already thinks like Rich Dad? What does he believe? How does he speak about money? What does he do first every month before anything else? Sit with that identity for 5 minutes every morning and watch what shifts in your decisions throughout the day. Your 7-Day Rich Dad Challenge. Day 1. Build your financial statement. Both columns. Full honesty. Day 2. Identify your liabilities that you have been calling assets. Name them specifically. Day 3. Research one asset class that has always felt out of reach or out of your lane. Just research. Day 4. Find one expense this month that can be redirected to asset acquisition instead. Day 5. Identify one skill gap in your financial literacy and find one resource to close it. Day 6. Write out what Rich Dad's financial identity sounds like in your own words. His beliefs, his language, his first move every month. Day 7. Take one concrete step towards your own asset column. One step. Irreversible. Real. Drop one word in the comments that describes how it feels to shift from earning to building. Just one word. I read every single one. Rich Dad, Poor Dad is not a book about becoming wealthy. It is a book about thinking differently, so that wealth becomes the natural result of who you are deciding to become. The programs your parents gave you were given with love, and they may have been the most expensive gift you ever received. Today, you choose new ones. Hit the like button if this hit different. Subscribe and hit the bell, because video 4 is Secrets of the Millionaire Mind by T. Harv Eker, and it goes even deeper into the financial blueprint running silently beneath everything you just heard today. Your free downloads are in the description. Thank you for being part of CosmiReads. Manifest, read, rise. See you in the next one.